Hello, ladies and gentlemen. Greg Mikulowski from ForexLive.com. This is a Kickstart video where I take a look at three of the major currency pairs: the euro versus US dollar, dollar versus yen, sterling versus US dollar from a tactical perspective. Today's date is October 2nd, 2024. Let's get started. ADP came in stronger than expected at 143,000 jobs. That is about where the U.S. non-farm payroll is expected to come in on Friday. But the ADP just includes the private sector, doesn't include the government sector, so it tends to be a little bit lower, and it's been biasing in that direction. So it's stronger than expected. It seems to imply that the U.S. jobs report might be a little bit stronger, but again, there's the correlation can be a little bit iffy. Nevertheless, looking at the markets, we are seeing the dollar move higher versus yen, but we are seeing up and down trading in the euro and sterling. I'll start off by taking a look at the euro versus US dollar. This is the hourly chart and trading yesterday. We fell below this key swing area. This swing area floor had a number of different swing lows going back in time. And in trading, not yesterday, but the day before, the market did fall below that level, but then reestablished support at the level, closed in the higher. But in the Asian session yesterday, the price started to move to the downside. We fell below this level, and that opened the door for further selling pressure that continued throughout the day until we reached this swing area down through here, and markets said, well, that's probably enough. And the market started we failed below that break, and we started to rotate back to the upside. In trading here today, we've been trading above and below this swing area through here, which has, again, a number of different swing lows and swing highs going back in time. Some of them, they come in right here, right here, right here, right here, right here, right here. So you can see trading below is more bearish, trading above is more bullish, trading below is more bearish. Moved above it here. Finally had one last check right here before moving to the upside, and then we didn't return to that level until yesterday's trade. And so today we traded above and below, above and below, above and below. We did hold below the 61.8% retracement, which happened to be this swing low right through here. So that was a nice little hold in trading here today on the top side at 1.10821. And since then, we've rotated back to the downside with the stronger ADP report. We're back below this swing area right through here, which we've made a sort of a choppy mess of. On the downside, we need to get below this 110.53.9 level, which was, again, a low price, a level of interest going back in time, at least things like this low right here. And this highs right here, right through here, right here before breaking to the upside. So getting below that level would increase the bearish bias, have traders looking down toward maybe this level at 110.25, and then start to look toward the other lows that we saw in the month of September. The low price for the month of September came right around the 110 level. The high prices are up here near the 112 level, so been in a 200 pip trading range, going from here to here to a 112 level here to back down. So, do we have the 110 in our future here? Well, that would imply a lower euro, higher U.S. dollar, and the central bankers are central bank policy idea is sort of shifting a little bit with the euro. ECB looking now, more people looking for a cut in October, which is not the case. And meanwhile, the Fed chair this week said that 25 basis points in November and December would be the base case, given the current projections, and that would be data dependent as well. So, you never know what moving back down toward the 110 level might be in the cards. Watch the 61.8. Watch the swing area right here. Let's take a look at the dollar versus yen next, and we're seeing a rotation to the upside here in trading with the yen getting weaker here, and we've moved up to this swing level right through here, which had just dual swing highs right there. You could also say it had an interest there, maybe interest here, and here. So there is some history around this level, and it did try to hold resistance in trading last week up here at these highs before breaking to the upside and then falling sharply to the downside. I guess that was on Friday's trade. So moving back up to this 145.20 level. Get above that level is needed to increase the bullish bias, in which case we'll look toward the 61.8% retracement of this move to the downside. That 61.8% retracement comes in at 145.639. That's at the level right here. Look for that to be the next target. If we were able to break above the 145.20 level in trading here today, we did move above the 50% and a level right here and at the 144.48 level. Maybe if I get on the arrow here, we can make it easier. Here, 144.48 level, and that's now going to be a close support or close support. It was resistance more or less through here, 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 and here. So be aware of that level, and even yesterday's trade. So be aware of that level of 144.48 up to 144.58. The 144.58 level is another 50% retracement level. That's of this longer-term move up from the January 2023 low to the September or July 2024 high. 50% comes in at 144.58. So be aware of 44 to 58 on the downside as support now for the dollar versus yen. For the sterling versus US dollar, similar look to what we saw in the euro versus US dollar today, with lots of ups and down price action and trading yesterday. We did like the euro versus US dollar fall sharply, breaking below the 100 and 200 hour moving averages, and just moving steadily to the downside. The price did get below the 100 bar moving average on the 4-hour chart. We held it here. We broke above it here, but that was short-lived when we rotated back to the upside. The 100 bar moving average is going to be support, as is this 38.2% retracement. We need to get below both those levels to increase the bearish bias, having traders looking down toward the 50% retracement, this swing area down through here near the 132.17 level. Stay above the 38.2% retracement. And rotation back toward these lows right through here near about the 133.10 level would be a target on the top side. So always correspond with these lows right here and these lows right here before breaking below those levels and trading. Yesterday, the high price at today came up toward that level, found willing sellers against the level, so it is a level of importance to traders. So far, we are staying below that level, so need to get below the 38.2, get below the 100 bar moving average in the 4-hour chart, and stay below those levels will increase the bearish bias in the sterling versus US dollar. So there you have it, a look at 3 of the major currency pairs. My name is Greg Michalowski. Good fortune with your trading today. Bye-bye.